complex group structures. Complex group structures. We are told the draft statements of financial position of P company and the SS company on 30th June 2017 were as follows. So you have the parent company, we have a subsidiary company, and then we have a sub-subsidiary company. But of course, we shall be able to see that this sub-sub, or rather this sub, we shall be able to see for sure that they are subsidiaries, sub and subsidiaries after you draw the group structure. So we can see here investments at cost. We had 80,000 shares in S. P bought 80,000 shares in S for 120,000. You're able to see this figure for 120,000. And then we have S company here, which paid 110,000 for 60,000 shares in SS company. And then we have the current assets. We have equity and liabilities. We have equity there, ordinary share capital, retained earnings, and payables. So we are told the P company acquired the shares in S company on 1st July 2014, when the reserves of S company stood at 40,000. And S company acquired its shares in SS company on 1st July 2015, when the reserves of SS company stood at 50,000. It is the group's policy to measure the non-controlling interest at acquisition at its proportionate share of the fair value, So they want us in this case here to do what here? They want us to prepare draft consolidated financial statements, to prepare draft consolidated statement of financial position of P Group at 30th June 2017. So then the very first thing that we need to do, ladies and gentlemen, here is really to understand how is this group structured? That is the first thing that we need to understand. How is this group structured? Utaweza ama hauwezi? Utaweza ama hauwezi? Hebu jaribu kuangalia group structure. Jaribu kuangalia group structure. Jaribu kuangalia group structure. Ladies and gentlemen, this is quite an interesting one. I can see something very important there. That P bought S, and then S bought SS. So we have here P, which bought S. P bought who? We are told here that P bought. We are told here that P bought S. That's P. So P bought S. And then S went ahead and bought what here? SS company. Interesting. So what was the percentages? So the percentages are given here. The percentages are given here. They're telling us that P company acquired its shares in S company. How many shares did P acquire? We are told P acquired here 80,000 shares in S company. 80,000 shares in S company. So I want to get the percentage shareholding. So this P acquired 80,000 shares. 80,000 shares in S. And then you can see from the balance sheets given here, from the statement of financial position given, ladies and gentlemen, here, they are telling us that 60,000 shares in SS. Who bought these 60,000 in SS? We are told it's S company that bought SS. So 60,000. Thank you very much. 60,000. So we have here 60,000 shares were bought by S. Like that. So then please come and give me the number of ordinary shares of S company. Here you will divide this by the number of ordinary shares of SS company. So is there somebody who can see the number of ordinary shares of S company? Number of ordinary shares of S company. Please help me. Number of ordinary shares of S company. How many are you able to see? How many are you able to see as the number of ordinary shares of S company? Of S company. Is there somebody who can see the number of ordinary shares of S company. 𝗤𝗤𝗄𝗄𝗄, 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 𝗤𝗤𝗄𝗄. Straight away, I'll go to the ordinary shares. I can see the par value is $1. And I can see the share capital of SS. Of S, I mean, is 100,000. So how do I get the nose? To get the nose, I'll pick the S company here divided by the par value. 100,000 divided by the $1. All right. So I hope you guys remember. I hope you guys are able to remember that to get the number of ordinary shares, so many students are not able to do this. To get the number of ordinary shares, we normally take the share capital given divided by par value. Please don't forget that. Like here for S company, the share capital given in the statement of financial position is 100,000. And the par value, I can see the par value per share there is what? Is 1. Is 1. All right. So in this case, automatically, that gives me 100,000 shares. Remember, when we're getting percentages, we don't work with share capital in terms of money. We normally work with nose. We normally work with the number of ordinary shares. How about number of ordinary shares of SS? Number of ordinary shares of SS, please go to SS company in the statement of financial position. Please go to the SS company. I can see 100,000 here. This is the share capital. So divide this by the par value of 1. So still this one here gives me 100,000 shares, 100,000 shares. So in terms of percentage, what do I have here? Somebody in terms of percentage, we have a P owning 80% of S. And then we have S owning 60% of SS, like that. So in this case here, company S becomes who to P? Is it an associate? Is S an associate of P? Is S an associate of P? Is S an associate of P? Given this percentage shareholding, 80% is too big. 80% is too big. So automatically S becomes what here? A subsidiary, meaning that here we have got control. The same case here with the S and the SS. S and the SS, 60% is more than 50%. It means automatically that we are in control. We are in control over SS. So then I would want somebody to tell me, you know, the group here means automatically that P is the parent. What do you think is the relationship between P and SS? Is SS going to be an associate of P or a subsidiary of P? Can somebody in this case here guide us here? SS to P. Who is the SS to P? Who is the SS to P? But you see, listen here, when you look at the effective ownership, the effective ownership of SS by P, effective ownership of SS by P, it will be 80% times 60%, which gives me what percentage? Now, could you kindly comment? Somebody make a comment there. That P directly owns 48% of SS, and 48% is less than 50%. They are not talking to me. It's only John who has spoken. Ladies and gentlemen, remember it is substance over form. We know that the form here is really 48%, but what is the substance? That if you are controlling a subsidiary, and the subsidiary is controlling another investment, this other investment being controlled by our subsidiary automatically becomes our under control. So this is control. So automatically it means that P, it's substance over form, and I told you this from the word go. It's not about just numbers. It's not all about numbers, right? It is substance over form. It is substance over form. What is down there substantially? That if you are able to control S, and S is controlling SS, then we as the parent automatically, we are controlling who? We are controlling SS. When you see control, don't even look at the number. Even if the number is 10%, this total here, even if the number is 10% here, if we control S and S is controlling SS, then SS automatically becomes a subsidiary of the parent. So in this case here, we are saying that this 48% notwithstanding, SS is still a subsidiary. A subsidiary is still a subsidiary of the parent. Is still a subsidiary of what here? Somebody? The parent. It is a subsidiary based on what is called control. We are controlling S, and S is controlling who? SS. So because of that control, ladies and gentlemen, the numbers here, notwithstanding, straight away SS becomes who? Becomes our subsidiary. If you wish, you can call it a sub-subsidiary, but that really doesn't make sense. In the group, this SS will be consolidated just like how you consolidate any subsidiary. Great. So are we in agreement that SS becomes a subsidiary of the parent? Let's first of all agree on that. If you don't agree on that, please, we can even stop the class and then all of us go back to what year? To bed. Because this is the fundamental thing of our today's what year? Of our today's discussion. Yes, what have we said? Remember what we said when we started this topic here called consolidation. We said we could even be owning 30% of a company, but provided you are in control, then that company becomes what here? Somebody? A subsidiary. Provided we are in control, that company becomes who? Becomes a subsidiary. So remember what we said when we started? We said, ladies and gentlemen, here that really it's not about what here? It's not about a game of numbers. I told you this. According to IFRS 10, it's no longer about numbers. And this has confused so many students of advanced level to get a zero in the entire question. They'll tell you that P owns a company called B. They'll tell you that P owns 30%. But they'll go ahead and tell you that P has been given the right to control B. In which way? They'll tell you that P has been given a right by the other shareholders to appoint, like, say, 4 out of what here 5 directors of B. 4 out of 5 directors of B. I'll not say that, 30% is less than what here is less than 50%. I told you that is the old standard. The new standard nowadays looks at what we call substance over form. Who is controlling this company? If you are the one controlling then this company through, for example, directorship, or at times by this percentage could be smaller, but then again you will get an examiner telling you that the other 70% is held by 10 people, is held by 10 investors equally, meaning that each investor is only holding what here 7%. There is no way those 10 people will ever come to agree to vote as a block, right? So it means that you who has got 30% is, of course, ahead of the rest. You only need like 1 or 2 people here to be able to pass resolutions very easily. It will be easier for you to coalesce, to put these other guys, a few of them together, to get you over 50% to make your decisions, as opposed to the guy who has got 7% putting together many of them. It will not be that easy. So it's all about who is in control, who is calling shots. It's not about percentage. Because the moment you miss out on the definition of these associate subsidiaries, you will get 0 in the entire question, and then you will keep on wondering, how comes am I failing this paper called AFR often? right? So like in this particular case, we have said effectively, P has got what percentage here? Somebody has got 48% in SS because of the 80% here and the 60% there. So P has got what here? Somebody 48% in SS. But now, what is happening here? Here, we've been able to control S. And the S is in control of who? Is in control of SS. So it means that we as P, because now, for example, we've got majority shareholders, majority directors here, we'll tell majority directors, we want you to go and do this and this in that subsidiary. In SS, we want you to ensure that the sales of, so automatically the moment we tell this guy we are in charge of them, we are in control of them, they'll go and execute whatever policies that we have here. So even if we had 30%, even if we had 10% here, provided we are able to speak to these guys and these guys are able to implement whatever we speak to them here, automatically it means that P is in control of SS. P is in control of SS. What I was taught in those old days, ladies and gentlemen, what we were taught in those old days, we are told here that if P controls S and S controls SS, you're able to see the controls here. You are able to see the controls here. You don't even compute the percentage. How about 48? We agree the concept of substance over form. Control has power. It's IFRS what here? It is IFRS 10. It is IFRS 10. Right? So what are we saying, ladies and gentlemen? Listen, and this is quite common, very common in your exams. You'll get something like this. You'll get something like this. We have company P owning, in this case here, for example, 55% of B. And then we have B owning, in this case here, for example, 52%. 52% of who? Of S. So meaning that automatically B becomes our subsidiary because this is more than 50%. So this becomes, so we are in control here, right? And then B, of course, will be in control of S because of this percentage. So B is in what here? In control. So utapata wanafunzi wengi sana, over half of the candidates who sit for this paper, watakwambia mwalimu, you know what? I tried computing in this case here the control of S. We tried in this case here to look at the percentage of P in S, and we got in this case here 55% times 52%. Could you kindly give me this answer? What is 55 times 52? 0.55 times 0.52. 0.55 times 0.52 gives me what figure, somebody? Please help me out here. Please help me out there. So wanasema it is 20, no, I'm not getting, 28.6%. Now, utapata wanafunzi, over a half of the students will tell you, you know what, that this S automatically then will become an associate in the group. S cannot be an associate. S is still being, I can see the control being uniform. S is being controlled by P. So S becomes a subsidiary in the group, the percentage here notwithstanding. So are we together up to there now? Are we together? Are we together up to there? Are we together up to there? Great. Thank you very much. Ladies and gentlemen, we go back to our structure. We go back to our structure. Our structure is quite an interesting one. We have a P, then we have got S, and then we have got SS, right? So we have P having 80% of S, and this one here having a 60% of what? 60% of SS. So we've said that here we are in control. The same case here, we are in control. So then I would want you to go straight away and give me the parent. The parent here owns 80%. How about the other stakeholder called NCI? NCI will be owning what percentage, somebody? 20%. Thank you very much. How about the percentage holdings in SS? The parent here in SS, the parent in SS will own 80% times 60%. The parent here will own a 48%. The parent will own 48%. The parent will own 48%. And then NCI NCI will own what percentage here? Somebody will own 52%. NCI will own 52% like that. And then now you'll get somebody making an argument that how can NCI have a bigger? It's possible. This 52% in this case here will be spread out to so many, for example, shareholders, such that each shareholder will be having an insignificant amount, giving the parent in this case here superpower status. Superpower status. Now, ladies and gentlemen, listen and listen to me very well here. Listen and listen to me very well. Listen and listen to me very well. So we have here, this will be very important for us to have our group structure. Very important, our group structure. So you can see like in SS, they're telling you the parent effectively owns 48% and the NCI owns what percentage? 52%, 52%, 52%. So please continue asking questions, continue asking questions. Jemima, you could give an example of subsidiary. You see, like now here, this SS is a sub-subsidiary. Although you don't have to call it a sub-subsidiary, it is a subsidiary in the name of what here in the group. It will be consolidated like what here, any subsidiary. So SS, if you wish, will be a sub-subsidiary of who? Of P. But there is nothing like really sub. This is just for learning. When you come to practice, I always keep on telling you I'm a group accountant. So Caroline, which grammar should guide us? Able to scale kwanza, perhaps hapa kuna problem. Yes, please put your questions clearly. Tell us how you're understanding. Feel free to comment here. Yeah, feel free to comment. Feel free to comment before you go to anything else. So I'm giving you like 2 minutes here to ventilate, talk to us. Give example of where parent has no control over subsidiary. It cannot be called SS. It can't be called SS. It will be very easy, that one really, very easy. So ladies and gentlemen, if for example, we have this kind of a situation. So we have here the parent having say 80% of B, and the B, for example, having 30% of a company called C. So this one, automatically I'm able to see control because of what here? 80%. How about this one? Is there control? How about this one? Is there control? No control. So this becomes what here? An associate. So there is no way you'll tell me straight away that P has got control over C. There is no way you'll tell me that control, P has got control over C, because C now is an associate. Is an associate, right? Yes. Now in the computations here, somebody has asked, we shall be using that 48%. We shall be using that 48%. Great. Now let's get back now here to business. Ladies and gentlemen, I've been able to see my group structure, but there is something I haven't yet done. This thing of defining the dates. We have the date of acquisition and the date of financial statements. This is very important for me. So we have the date of acquisition and the date of financial statements. The same case here, the date of acquisition and the date of financial statements. It's important for me to really appreciate time in my group structures. So date of financial statements is normally quite easy for us to pick this one. Date of financial statements. The date of the financial statements given is here. What do we have here? Somebody, S company, whatever, 30th June, 2017. So 30th June, 2017, 30th June, 2017, 30th June, 2017. The date of the financial statements, this one has got no controversies at all. Date of financial statements, no controversies. You simply pick the date of financial statements from what is given up there. How about date of acquisition? When did P acquire SS, or rather acquire S? P acquired S. P acquired S. We are told here date of acquisition. We are told here P company acquired its shares in S company on 1st July 2014. So we have here 1st July 2014, and then S acquiring SS, S acquiring SS, 1st July 2015. So 1st July 2015, 1st July 2015. This does not scare me at all, because when I look at both cases, ladies and gentlemen, we are seeing that we have got more than what year? A year. The time differences here, this could be like 4 or 5 years, time difference. I'm normally, in this case here, moved with my workings when I have the difference between these dates being like 6 months, 7 months, etc. Right? So like now here, ladies and gentlemen, it will be very important for you to master the dates here so that you can be able to know, like, if it's income statement, am I going to prorate? When I get my years being that far, ladies and gentlemen, far apart, this makes me very happy. But again, it will be very important for us to know that SS here became a member of the group on this date. Became a member of the group on this date. SS became a member of the group on this date. Great. Ladies and gentlemen, from there, I would want us to move on to the next thing here. We move on to the next thing here. So then I have been able to put down the group structure. I know the next step. The next step before I begin my consolidation process, although for us here now, of course, in an exam, I'll start consolidating straight away. But for us here, I know that the next step is the step of net assets. So please go ahead and give me the net assets. Give me the net assets of S. Give me the net assets of S. Net assets of S at acquisition and at reporting. 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 So S at acquisition. Remember, when we talk of net assets, what are we thinking about? We are thinking about equities. We are thinking about retained earnings. We are thinking about fair value adjustments. Fair value adjustments. Fair value adjustments. Fair value adjustments. All right. So, ladies and gentlemen, what do we have here? We are told here, P company acquired shares. Right, even before I go to these reserves, we have the equity of S company. Somebody should be able to see the equity of S company. Share capital is 100,000. 100,000. So when I come in this case here to the share capital, so we have here share capital. Share capital of S is 100,000 at acquisition, 100,000 at reporting. 100,000 at acquisition, 100,000 at reporting. That does not change, remember. That remains constant. Share capital remains constant. From there, come and give me the retained earnings. Retained earnings, ladies and gentlemen, retained earnings. Retained earnings, what do we have? Retained earnings, what we have here for retained earnings. Retained earnings, this is what we have. These are retained earnings at reporting for S. For S at reporting, for S, retained earnings at reporting is 170,000. But remember, we had retained earnings or reserves. We are told here, S company acquired, P company acquired the shares in S company on 1st July 2014, when the reserves or retained earnings here stood at 40,000. So we have here 40,000 like that. So you can talk of retained earnings stroke reserves. In this question, we do not have fair value adjustments. So then what you need to do is to come and give us the total. Give us 140,000, the total here is 270,000. So then what is the difference between the two? Please give me the difference between the two. Please give me the difference between the two. The difference will be 270,000 minus 140,000, which gives me 130,000, which gives me 130,000. Who can remind us? What name do we give to this difference? What name do we give to this difference? What name do we give to this difference? There is a special name. There is a special name. Thank you very much, John. It is what we call the famous PAP, post-acquisition profit. It's what we call the post-acquisition profit. So remember that PAP is normally shared out right away to the two owners. PAP, go ahead and share PAP to the two owners. So shared as follows. Shared as follows. So we have here the parent. The parent takes 130,000 times what percentage? The parent takes 130,000 times what percentage, somebody? Times what percentage, somebody? Somebody talk to me. Times 80%. Times 80%. So 130,000 times 80%. Thank you very much. Times 80%. And then the other guy gets what percentage here? NCI will be 130,000 times 20%. Times 20%. Please give me these figures. Please give me these figures. Give me these figures. Please give me these figures. So the first one I'm being told is 20, or the second, I don't know, should be the second one, 26,000, 26,000. How about the first one? How about the first one? The first one is 104,000, like that, 104,000, like that. If you add the two, that will be 130,000. So those are net assets of S, the first subsidiary. And you must give us net assets of each subsidiary that you have. So we have the net assets of S. Now give us the net assets of SS. Give us the net assets of SS. So if you allow me, I'll wrap this very fast. So can I wrap this? Can I wrap this? Yes or no? Okay. So in talk of net assets, don't forget it's share capital, it's retained earnings, it's fair value adjustment. I've seen Mayom saying we should be doing CPA past papers. Mayom, go slowly. Let us first of all build the concept. For those of you who have been reading those past paper questions as CPA, these things are the same. The moment you have the concept, that is it. Let's build the ground, and then we'll be able to get 20/20 in this question. Because like now, if I just rush to a question in the past paper, it has got what here? It has got a piecemeal acquisition. It has got partial disposal. I'll lose you. You guys will disappear. But if I go slowly, like now I only need like 2 sessions. If I go slow like that, you guys will be able to tackle those questions like nothing really. Just go slow, 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 slow. Get this one, like now after this, I'll be able to do the piecemeal acquisition using an SEC short question. From then I will be able to tackle a comprehensive question from our past paper. Only 1, 2. You guys are done. So like now after this, I'll be able to do for you the acquisition piecemeal. Then we have disposal of shares from control to associate, for example. And then we have foreign subsidiary. Foreign subsidiary. From their group cash flows, that will be it. But if I'm going to group cash flows, if I'll be going to group cash flows, that will need more time. That will need more time. And if you don't mind, it's only that we are very busy. I would really want to have like 2 sessions in a week. 2 sessions in a week for us to be able to finish these things very fast. And then I get out of the way for Mr. Norbert CPA, Norbert here to complete this thing. So now we have here net assets of this other subsidiary. If it was an associate, we don't go looking for net assets of associates. Those are small investments. But subsidiaries, you must give us net assets. So for SS, could you kindly give me the net assets at acquisition and net assets at what year at reporting? Net assets at acquisition, net assets at reporting. All right. Let me just display that one and give you 3 minutes. I would want to see whether there is anybody who will be able to give me the net assets of this thing at acquisition and net assets at what year at reporting. I'm giving you exactly 3 minutes. All right, let's see. Okay. Great. I'll be able to share this book with you, no problem. No worries, no worries. So is there anybody who is able to get those net assets? Is there anybody who is able to get those net assets? Anybody who is able to get those net assets? Net assets of SS company. Net assets of SS company. 215 at reporting. Thank you very much. Let's see. Let's work this out together. So tukuja hapa abracadabra, nikisikia tu net assets, mimi najua sana net assets. These are the reserves. These are the equities. These are the fair value adjustments. So I'll start always with share capital. Share capital, share capital. Share capital, your subsidiary. Your subsidiary, your SS. Share capital, your subsidiary, your SS. Share capital ya subsidiary ya SS wanasema ni ngapi? Ndio hii hapa SS. It's 100,000, 100,000. So it's 100,000, 100,000. Hii haibadiliki, hii ni max ya bure. 100,000, 100,000. And then you ask yourself whether you have any retained earnings. Start always with retained earnings at reporting. Retained earnings at reporting. Retained earnings at reporting. What do we have here? Retained earnings at reporting. We have 115,000. So 115,000. How about retained earnings or reserves at acquisition? When I was acquiring this company, SS, it had reserves of 50,000. 50,000. So for those of you who are used to the T accounts of doing group consolidation, T accounts, ishapigwa marufuku na CASNEB. Hakuna mambo ya T accounts, cost of control, iliisha kitambo. But for those of you who like that approach, this is what you guys call the pre-acquisition. Pre-acquisition, right? So we don't have any fair value adjustments. Come and add here. Give us, this is 150,000. And then somebody has given me 215,000. So then I'll be able to get the PAP immediately. The PAP, you subtract the 2, right? So it will be 215,000 minus 150,000. So could you kindly give me a figure? 65,000. Thank you very much. So please go ahead and share this 65,000. Share it out. So share it out. Shared as follows. Shared as follows. So we have 65,000. So the parent here, the parent will be 65,000 times what percentage? You remember as SS percentages. Who remembers SS percentages? Who remembers SS percentages? 48%. So the parent takes home 48%. Please give me this answer. 65,000 times 0.48 gives me what figure? 31,200. Thank you very much. 31,200. And then we have NCI. NCI will be 65,000 times 52%, which will end up giving us what figure, somebody? 33,800. Yep, could be true. 33,800. Thank you very much. And then I would want to give you guys 1 minute. After net assets, of course, we know that the next thing will be goodwill. Goodwill. So I would want to give you 1 minute, each one of us, to calculate the goodwill in the first, goodwill is normally computed for the subsidiaries. So go ahead and give me goodwill of the first, sorry. Can I wrap this? Can I wrap this? Yes, thank you very much. So please go ahead and give me the goodwill in the first company, goodwill in S. So give me the goodwill in the first subsidiary called S. I'm giving you 1 minute, try. So is there anybody who has the answer? Is there anybody who has the answer? Is there anybody who has the answer for goodwill? Or I display the question. Sorry. So I'll give you 2 more minutes. Please give me the goodwill. Okay. Okay. Any answer, no answer. So goodwill S company, subsidiary. So we start with the parent's consideration. The parent's consideration. The parent's consideration. So the parent's consideration, what do we have here for parent's consideration? The parent's consideration, what do we have here for the parent's consideration? So the parent, we are told the investment it made at cost. You can see the parent to buy this S company, it bought this at 120,000. So the parent bought this at 120,000. 120,000. Thank you very much. The parent never bought 100% of this. There's another party who came on board. So then we have here the NCI's consideration. NCI's consideration. Is there anybody who can give me a figure for NCI's consideration? Is there anybody who can give me a figure for NCI's consideration? You know, we are used to situations where the examiner gives us the value of NCI. So NCI here has not been given. And if NCI has not been given, the examiner, not examiner, but the IFRS 10 is very, very clear with us. It tells us that whenever the NCI's figure is not given, use the proportionate method. So proportion of net assets at acquisition. So the NCI proportion percentage mliambia 20%. Ebu angalieni at acquisition, what were the net assets value of this company called S? You know, kuna at acquisition, kuna at reporting. At acquisition, is there somebody who can give me the figure of the total net assets of the subsidiary at acquisition? Ilikuwa 24,000 kweli? At 140,000, yes. 140,000. Oh, this is now what will come to 28,000, right? This what now will come to 28,000. 28,000. Proportionate share. Is that now what we call full goodwill? Listen, whenever you are given fair value, if fair value of NCI, if fair value of NCI is given, then this one here is normally called full goodwill. Full goodwill method. Whenever the fair value of NCI is given, right, whatever goodwill will be getting, or rather whatever method we'll be using, is called full goodwill method. And at times, in this case here, fair value of, this is when it is given. If not given, then you shall be able to calculate what we call the proportionate. You shall use what we call the proportionate method, where you'll come and take the proportion of the net assets, proportion of NCI of the net assets at acquisition. So 20% of 140,000, that gives me 28,000. So then what is the total consideration? Can somebody give me here the total consideration? The total consideration nakuja ngapi ukiongeza zote mbili? Total consideration nakuja ngapi ukiongeza zote mbili? Total consideration inakuja 148,000. And then now what do? You will come and less net assets. You less net assets at when? At acquisition. You less net assets at acquisition. Less net assets at acquisition. Which you guys gave me a figure. At acquisition, you gave me a figure of how much? At acquisition, you gave me a figure of 140,000. When you subtract these, you'll be able to get what we call goodwill at acquisition. So you'll be able to get goodwill at acquisition. Over how much? Of 28,000. Of 28,000. All right. And then we have, of course, any impairment. There were no impairments. No impairments. So this automatically also becomes the goodwill at reporting. So I can come and double underline this. I can go ahead and double underline this. Go ahead and double underline that. Very important. When you look at this, already they have the goodwill, where did we get 28,000 from? It's 8,000, sorry. You can see the goodwill here is 8,000. It's 8,000, I'm sorry for that. This is supposed to be 148 minus 140. Where did I get 20? It's 8,000. Are we together there? Are we together there? Are we together? Are we together there? That goodwill is supposed to be 8,000. Goodwill is supposed to be 8,000. Thank you very much. So then could you kindly go ahead and calculate for me the goodwill now in SS? Please go ahead and calculate for me the goodwill in SS. The goodwill in SS. Go ahead and calculate for me the goodwill in SS. Go ahead and calculate for me the goodwill in SS. Goodwill in SS. Let me project the question. There it is, goodwill in SS. Just try your best, just try your best, just try your best. Goodwill in SS, what do we have there? All right. I'm not seeing anybody talking anything here. I'm not seeing anybody giving me a figure. They're giving me a figure of 22,000. Thinking big. In SS. 33,000. Lucy Amanda Kasaba 33,000. Let's see how big Lucy has a thought about this. But I have to get another answer from someone else. Before we check the answer, 38,000. These students are the best. They're giving me different answers. 38. 38 seems popular, but so wrong. I can tell you. Let's see here. You can see goodwill. You can see goodwill is supposed to be 16,000 for SS. Goodwill is supposed to be 16,000. I mean. How did they get this? It's very easy. Thank you very much for trying. Thank you very much for trying. How did they get this? Thank you very much for trying. So in SS, so we have P, we have S, we have SS, 80%, 60%. So remember that S, ladies and gentlemen, paid how much to acquire SS? Quite interesting. Quite interesting. We are told here that these 80,000 shares in SS were bought by S company at 110,000. So it means that S paid 110,000 here. Very important. They paid 110,000. So come here and give us the parents' consideration. It is 80% of 110. The parent never paid. You know, the parent only owns 80% of S. So when S raises any money, when S raises this money it has gotten from two owners. It has raised this from two owners. It got 80% from the parent and 20% from who? From NCI. From NCI. Right? So hapo ndio kunakuwa na trick peke yake. Ukishika hiyo kuisha. You know, you're not looking at this. We are not calculating this as goodwill of S. We are looking at this as goodwill of the parent company in SS. So in this case here, we are saying that then if S paid 110,000, this 110,000, how was it raised? 80% was given by the parent, 20% was given by NCI. So here the parent's consideration, the parent's payment must have been 80% of 110,000, which gives me 88,000. How about NCI's? NCI's consideration, this is quite easy. So NCI's consideration, is there anybody who is able to give us the NCI's? It has to be proportionate method, proportionate method, proportionate method. So this proportionate method, what is the net assets value of SS? Net assets value of SS here. Net assets value of SS at acquisition. Sorry, I never asked very well. Net assets of SS at acquisition is 150,000. And then the group NCI under SS, you guys gave me 52, so it should be 52% of this 150,000. Yes. Could you kindly give me this figure? Hapo utapata wengi wa kwanza kuambia sijui 20%. No, this concept is only applicable whenever we have this issue of what is subsidiary in the parent's consideration. So 78,000. Thank you very much. So then could you kindly give me the total consideration paid? The total consideration paid. The total consideration paid will be equal to 166,000. 166,000. Thank you very much. So please come under less the net assets. Net assets at acquisition. Are you able to remember the figure of net assets? You guys gave me a figure of 150,000. You gave me a figure of 150,000. 150,000. So please go ahead and subtract for you to give me the goodwill. So the goodwill will be equal to what here, somebody? 16,000. And therefore, the total goodwill which I'll take to my group statement of financial position will be the sum of the two. Therefore, the total goodwill will be equal to, 8,000 plus 16,000. This is the goodwill of S. This is the goodwill of SS. That's how they got this figure here. That's how they got this figure here. That's how they got this figure of 24,000. This figure there. Great. Thank you very much. Now, ladies and gentlemen, from there, the last working that I'll do is the working of NCI. The working of NCI. The working of NCI. So if you allow me, I'll now rub this. Can I rub this? Can I rub this very fast? Can I rub this very fast? Great. So the last working that I'll do is the working of NCI. In an exam, let me tell you, in an exam, there are workings I'll never do, including that one of NCI. In an exam, I'll be able to show you shortcuts here and there that you need for you to be able to do what you to survive. But now here, because you're learning for purpose of you applying this thing at your workplaces in future, it will be important for us to come and calculate the NCI. So the NCI. So NCI, you can combine them, NCI in S and NCI in SS. So we have NCI at acquisition, NCI at acquisition, right? We have share of who? Share of POPs of the NCI. All right. All right. Then you give me the totals here. And then you come and give me the total there. I've taught you how to calculate these things severally. Let me see whether anybody will be able to get this metrics here. NCI at acquisition. I don't need to share the question. Already you have those figures somewhere. So NCI at acquisition, and then they grew. They grew. I'm waiting for somebody to give me a figure. So this figure here, I would want to take my today's breakfast with somebody. Somebody will be able to give me this figure. Can see good trials there. 163, 800. Let's compare notes. Thank you very much for trying, but I can assure you there is some double counting that you have not factored in. If you look at this very well, the non-controlling interest, yes, there is this 22,000 you guys never factored in. Right? Right? Now, ladies and gentlemen, let's do this together. Let's do this together. Let's do this together. So at least NCIs, the ones that we used in computing our goodwill, the NCI that we used in computing our goodwill, NCI at hapo ilikuwa ngapi? Somebody please talk to me. Ya S ilikuwa ngapi? Somebody NCI at ile tulitumia kwa 28,000. Thank you very much. How about this one here? NCI at ile tulitumia kutafuta goodwill ya SS ilikuwa inakuja ngapi? Somebody 78,000, right? 78,000. Thank you very much. How about share of PAP? The share of PAP. Share of PAP. We have the share of PAP, 26,000 for S, 26,000 for S. How about share of PAP for SS? How about share of PAP for SS? Inakuja 33,800, 33,800. So could you kindly give me these figures very fast? Please give me these figures very fast. NCI ukiongeza mbili ngapi? Ukiongeza mbili ngapi? 108,000. 106,000. Thank you very much. 106,000. Haya, hii na hii unapata ngapi? 59,800. 59,800. Haya, niongezea hizo mbili zinakuja ngapi? Inakuja 165,800. 165,800. And then we'll come under less the NCI's consideration. You less the NCI's consideration, what we call the advance, like an advance payment. You'll be able to see this later. We take care of this to avoid double counting. There's some double counting. Remember we had a P. We had a P here. all right? Who bought S, all right? Who went ahead and bought SS? So we had this 80%, right? And then you remember this SS, we paid, or rather we paid for SS, we paid 110 there, right? 80% was paid by who? By the parent. And then we have some NCI. NCI, in this case, who bought what here? Who paid what percentage? 20%. So this 20% of 110, 20% of 110, 20% of 110 nakuja ngapi somebody? You may not be able to understand this very well, but it's something that will really come up. You'll be able to understand it, especially when you're doing the financial statements. But you always remember that 80% on a summary 22,000. So this 22,000 is now what you bring here. And give me the NCI at reporting. I'm not afraid of this. This is something you'll understand. As we move on, it is something you will understand. So NCI at reporting gives me 143,000, 143,800, like that. Please double underline this figure. This is a very important figure. Now listen here. Listen here. Retained earnings figures, retained earnings workings, never do retained earning working, never do it. It should come as a balancing figure in your balance sheet. So that is it. If you are through with this, mention the name of the group. So tell us their P group. Tell us their P group. P group. Consolidated. Consolidated statement of financial position. Consolidated statement of financial position as at, blah, 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 and then you underline. As at, blah, 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 and then you underline. And then you underline. And then, ladies and gentlemen, the moment now we are there, now everything is at home. Everything is at home. So here we are. What we shall do, we shall come here, and to consolidate is to put together. To consolidate is to put together. So remember, fortunately, all these are subsidiaries, parent and subsidiary. So we start with non-current assets, where I'll pick the tangible assets, tangible assets. So tangible assets, what do we have there? We are consolidating everything there. Tangible assets, I have 105 plus 125. So we have 105,000 plus 125,000 of the subsidiary, first subsidiary, plus 180,000, plus 180,000. What figures are we able to get? What figure are we able to get here for tangible assets? The non-current assets, so tangible assets. Here, remember, there is no fair value adjustment. There is nothing like depreciation for that fair value adjustment. We simply consolidate. You're adding together. You're adding together. So this gives us 410,000. Thank you very much. Remember, these are NCAs, the non-current what here? Non-current assets. The non-current assets. The non-current assets. Now, from ladies and gentlemen, we move on to the next one. So the next one, I can see investments in my subsidiaries. Investment in my subsidiaries can never be carried here. Who can tell us, what are we going to replace this investment in subsidiaries with? Who can talk to us? Investment in subsidiaries, those ones must be replaced with some other good asset, which is the name. Thank you very much. Goodwill. Goodwill. So goodwill. So could you kindly give me the goodwill amount? Already we have computed this goodwill amount. Give me the goodwill amount. Goodwill amount. Thank you very much. So please give me the goodwill amount. 24,000. Thank you very much. So do we have any other non-current asset? Do we have any other non-current asset? Do we have any other non-current asset? Any other non-current asset? Any other non-current asset? None. None. So give me the current assets. Current assets, I can see them 80, 70, 60. So current assets. So the current assets, free marks really. So current assets, we have 80 plus 70,000 plus 70,000 plus 60,000, which will end up giving me what figure? Somebody there. Which will end up giving me what figure? Somebody here, somebody here, somebody here. This will end up giving me what figure? Somebody current assets. 210,000. So then what is my asset base? What is my total assets base? Total assets. My assets base, 644,000. 644,000. Thank you very much. So from there, we go to the equity side. So equity and liabilities. So we start with the equity. The first thing we're going to do is to take the share capital. Who can remind us the concept of share capital in the consolidated statement of financial position? Who can remind us the concept of share capital? Nana may not, parent only. Thank you very much. We only take the one of the parent. Parent only. So parent only, what do we have here? Parent only, what do we have here for the parent only? So parent only, if you look at the one of the, they'll give you so many of them. So the one of parent here, the one of parent here, you can see the equity ordinary shares, 80,000. That's what we pick, 80,000. Parent only, 80,000. Now, ladies and gentlemen, apart from this share capital, do we have any other thing? Yes, the retained earnings. Retained earnings, hii nitamwandikia working, but mimi najua itakuwa ni nini? The balancing figure. This is the hardest working in group consolidation. We don't do it. Those workings don't carry any mark. We want, hata ukiangalia marking scheme itakuwa ni easy tu. 1, 1, 1, 1 like that. So inakuwa ni balancing figure. Unaweka na times unakuwa hata mwanafunzi mzuri. Kama utapata your balancing figure later, you can even draw an emoji for this examiner. When he's marking, you also need to give these people a reason to smile. Ama atakuangusha. So take the earnings, that will come what year? Later like that as a balancing figure. From there, do we have any other equity component? Do we have any other equity component? Do we have any other equity component? Patapotea, am I talking alone? Are they able to hear me? Do we have any other equity component? Equity component, permanent sources of capital, NCI. These guys, it's like we owe them, but remember they can never come back for their capital. They can never come back to us for their capital. It becomes a permanent source of fund. So can somebody give us NCI here? NCI. Is there somebody who is able to remind us the figure of NCI? 143,800. 143,800. Thank you very much. 143,800. After this, of course, we know next is liabilities. Liabilities, normally we start with the non-current, the loans. They are not there. So here we only have the short term, which are what are the payables. The payables. So payables, what do we have here for payables? The payables, you can see payables, we have 30, 35, and 25. So payables, we have 30, we are only consolidating. So we have 30,000 plus 35,000, 35,000 plus 25,000, 25,000. So then that will give me what figure, somebody, for payables? That will give me what figure for payables? Payables. What figure do we have? For payables, so what figure do we have? So 90,000. Thank you very much. Now from there, ladies and gentlemen, please come here and give me the total. So the total here should be 644,000. 644, because of the totals must agree. So the balancing figure will be your retained earnings. So retained earnings will be 644,000 minus this, minus this, minus this. So 644,000 minus this, minus this, minus this. That gives you 330,600. 330,600, like that. 330,600. 330,600. 600, like that. 330, 600. Yeah. Is it 330,600 or 330,200? 330,600 or 330,200? Because I can see here, retained earnings for 10 should be 330,200. Is there somewhere we have missed something really? I doubt. Is it 330? Yeah, it's 330,200. 330,200. Sorry for that. So this should be 330,200. And now that marks the end of what year? The end of this statement of financial position. The end of this statement of financial position. But remember, in an exam, you start with this directly. In an exam, you don't go. In an exam, what I'll do, I'll understand the group structure. After group structure, I'll go ahead and calculate what year and calculate. I'll go ahead and calculate. I'll go ahead and calculate. I'll go ahead and calculate this consolidation. The moment I've understood the subsidiary parents, like that. And then I'll be able to finish with the workings. Workings should come later. After all, I'll not even do. You know, I've marked this AFR paper also for quite some time. And I know what normally disturbs students. Students are bright, but they don't have exam technique. So you get a student who goes like now through what DO is telling us there, try to get, you know, you're supposed to do all these group consolidation questions in how many minutes? 30 minutes. 30 minutes, you can't do so much, trust you me. You need to appreciate the low-hanging fruits. You need to appreciate how to harvest the low-hanging fruits. Great. How we calculated 52%. 52%, if you can recall, we took 80%, the parent had 80%, and then these other S had 60% in SS. So this gave us 48%. The difference between these and 100, the complementing figure is 52. That becomes, in this case here, the LCI. So ladies and gentlemen, that marks the end of my class, but I would wish, in between the week, I would wish to do something very important here. I would wish to do this associate, joint arrangements, joint ventures. Just one question, because they use the equity method. So that now the other week, God willing, now the other, not the other one. No. I mean, come next week, I would want to do the associates, joint arrangements, joint ventures, using the equity method. You guys have to provide me a day. And then the other week now, I'll be able to go straight away to the piecemeal acquisitions, the disposals, and what we call what year? Foreign subsidiary. And then we finish this thing. Yep. How did he get the 110 times 20%? Remember, we had this 80%, the NCI was 20%. And this company called S paid 110. Out of the 110 that was paid, 110,000, 80% was paid by the parent, 20% was paid by NCI. So we took 20% of that 100 and 10. Where did the 26,000 come from? And a share of PAP. That tells me that you guys have not been reading. You have not been watching the other videos. Eileen, kuna the other videos that you guys are supposed to do what you have to watch. Plus this video, I'm also going to send it to you. You'll be able to appreciate that concept of what year, that concept of PAP. Please don't miss out any concept of group consolidation. This is your savior. This is your savior. Otherwise, thank you very much, ladies and gentlemen. If you allow me, I'm supposed to be rushing somewhere. If you allow Mwalimu will disappear. We continue with the other discussions on WhatsApp. Bye. Good day.